Yo, what's going down? So, really wanted to jump into today's video and just talk a little bit about a key lesson that I've really learned this year that has been super valuable to me, and I'm sure will be valuable to you as well. And that is the importance of playing defense when day trading or when you're in the market. It's definitely something that I had heard about, but something that I didn't practice, and it's something that I wish I would have implemented a little earlier on my path. A lot of the mistakes that I would have made, or a lot of the mistakes that I did make, I probably would not have made as many, or I would have just been aware of it a lot sooner. So, um, and I believe in what I'm learning is playing defense and managing your capital is just as important as actually making money in the market. So, there's that. It's making money is awesome, but protecting what you got and playing defense and protecting it is almost more important. And how I define um, playing defense is really it's just kind of like sports, like in basketball. If you've played sports, um, they always say defense wins games, and in the market, defense is what will allow you to stay alive. Um, there's there's often times when you like take a trade or you get into a position and um, you think that the stock is just gonna go up and you're just gonna make a ton of money, or that's the hope. But a lot of times in that delusion, you don't even think about the adverse or it going the opposite way. And that's what I did for a long time. Just I would get into a stock and not practice putting in stop orders. I didn't i didn't get into stocks and calculate the amount that I wanted to risk per trade, and it cost me a lot. Like I can't even imagine. Maybe one of these days I'll write it down and get some clarity for myself exactly how much uh, potential gains that I gave away. But it really is so important to understand what a stop loss is, understand how to calculate your position size. So I'll take a second to talk a little bit about a stop loss if you don't know what that is. And again, this is just for those beginners that really don't have a deep understanding of trading. A stop loss is essentially a it's an order that you put into your broker or your platform or whatever you're trading on. It's a order that protects your downside. So let's say you want to buy something at $1, and you think it's going to go to $1.30. The stock's going to go to $1.30, but the most that you're willing to lose is say 10 cents. From $1, what you would do is you would go in and put a stop loss order in with your broker to stop you out at 90 cents. So you're risking 10 cents on that trade. And what would happen is that trade or that order is not executed unless it hits that 90 cents. So as long as it's up above 91 cents, it can go all the way up to 2, 3, 4, 5, 10, $20, $100. As long as it doesn't come close to tapping out that 90 cents, you're going to stay in the trade. And that's really helpful to have a capped downside, because it protects you and it gives you the opportunity to live another day, fight another day, trade another day. Because that's the goal, is to stay around for the long term, not just to trade for a week or a month or a year. And by protecting how much you lose on a particular trade on a particular day is going to keep you around in the game over the long term. And really quick, I'll go over my interpretation of position sizing. And honestly, if you go on YouTube or Google or throw in some type of AI, you can figure out exactly what the proper way to do risk sizing. But just as a general idea, let's say you want to, the most you want to lose is let's say $50 on a particular trade. What you would do is you would factor in where the stock is trading at, and where you think it's gonna go, like its range. Let's say the stock is trading at $1. The range, you think that maybe it's gonna lose like 20 cents, or the most you want to lose is 20 cents on the trade. So what you would do is you take the $50 and divide 20 cents into the $50, and that will calculate the amount of shares that you were able to purchase. That way, you won't exceed that $50. Just Google something as far as position sizing as a way to protect your downside in the trade, in addition to using stop losses. And the other thing that I want to mention as far as playing defense with the stock market or whatever markets you're trading is to avoid overtrading. This is probably the thing that has been my Achilles heel for sure. All of it, but really overtrading and just taking on too much risk, too much exposure. So having some type of system where you have a max 1 or 2 or 3 trades in a day, that way you again allow yourself to trade another day. That's really the most important thing, is to have these rules or systems that help protect you. Because offense, playing offense and getting to a stock and having it run to the moon, that's the easy part. The difficult part, and the part that I think a lot of beginner traders deal with, is like being able to cut losses quickly, or capping the downside so that your 5,000 or $100 account, whatever you're trading with, doesn't go to zero. That's the goal, is to preserve your capital and to build your account up over time. So reflecting on how using some of these things as of late has really helped me out. By using these stop losses, it allows me to take trades risk-free. Not risk-free, but at least my mindset, it doesn't make me like all spun out or nervous about blowing up an account or losing too much money. That kind of is tied to like my plan, so that before I enter into a stock, my goal is to have my take profit zones where I want to scale out of my trade, and then having a designated clear area where if it reaches this point, if it goes below this, that means I'm done with the trade altogether. I'm out of it. And so, in trading in the zone, I think I mentioned before, part of having that stop loss, or that area where you get stopped out at, that is the amount that you deem is it's just no good. This trade is no good. Whatever trade idea that you had, this is not a good trade, and you need to exit, cut your losses, and move on. Whether that means maybe taking one other trade or 2 other trades for that trading day, or just walking away for the day. That's really the thing that has been helping me out a lot, is just really putting a constraint around how often I trade, and just being really, really patient. I think that's the thing that I'm seeing, which is different for me right now, and one of the things why I want to get on YouTube and document my process, because being patient is really going to help you out. So that's just kind of recapping where my mind is and what I want to help other newbie traders get an understanding on. Is if you don't know about stop losses and you're putting money in the market, it's like driving a car without brakes. So you never want to be in a position where you are getting into a trade without being able to get stopped out. Even if you think it's going to go to the moon, you don't want to put yourself in that kind of situation. The second part is position sizing. Really getting clarity on how much you are willing to risk per trade. If you don't have that amount and you're just kind of doing it at a random approach, it's really going to cost you, because you're just kind of jumping into trades and you don't have those clearly defined areas that you want to take profit, those clear areas where you need to stop out, and then how much capital you're going to put in this trade. It's going to be difficult to be consistently profitable. And then also having a system to which you are not over trading, and you are keeping your trades to a minimum per day. Because again, the idea is to be able to trade over a career, not just for a season. All right. So what I may do is I'll link some other videos in the description so that you can go and learn a little bit more about some of these things that I'm talking about. But for me, practicing some of this defense in my trading has really changed how I'm able to enter these positions and really make money over the long term. So I encourage you to do a little more research and get some clarity on these topics. But that's all I got today. Thank you for watching, and good luck with your trading. Peace.